All right, welcome to the analysis for the week ending May 9. Yeah, I think it's May 9. Oh, sorry, it's May 10. The week ending May 10. All right, so this is the second consecutive week that we've done this, and we're proud to say that our prediction last week came true in that the market touching the upper band of the Bollinger did indeed went down as we predicted. This is the move last week, so let's pull it up a bit. We were here last week. We correctly predicted that the market would go down, and it did go down. So at this point, last Friday, and remember that the election has not happened then. Last Friday, the market is down. I guess investors are on a wait and see because of what's going to happen the Monday after, which is today. There's no trading in the stock market today. But last Friday, the market went down 0.17% day to day to 7742. Remember that the last high was almost 8,000, which is about 6 days ago, 6 trading days ago. So, but last Friday, it was now touching the lower portion, the lower band of the Bollinger Bands. Now you pay close attention to the moving averages, and I'll go back to the 1-year view. The moving averages still points towards bullishness in the long term. The long term being the 200-day average, while the price now has gone below both the 25-day average, which is the red one, and the 75-day average. And if this trend continues and the price would go below the 200-day average, then the bearishness of the market would be confirmed, and it will now be the market. It will be on a downtrend. Now, inspecting on the RSI this week, last week it was at 60 something, and we said it's still at neutral zone. Right now, it's still at neutral zone, but it's almost nearing oversold levels. Let's see what happens this week. If the RSI will finally touch the oversold levels. On the ADX side, the sellers are outnumbering the buyers 27 to 16. The trend is still very low. The strength of the trend is around 13. So it's still ranging at this point in time. If you look at the Bollinger Bands, indeed, the Bollinger started narrowing since April. There's a bit of a widening, a move starting from May 9. If this becomes a breakout, then the breakout should be on the upside, because it went from down to up, and then if it has reached the downwards point here, or the bottom, then the next breakout should be uptrend. However, having said that, if this were in fact the breakout, then if it's starting to break out now, then this price would erode more and more, and it will touch the next support line, which is At 7615 at this point in time, this is the 200-day average. And if we can inspect some of the previous lows, it would be around this time, which is at about 74, and then 71, and then last November of 2018 it was at 6865. Of course, it's already far-fetched. I mean, if you look at it now, because it's already 800 points down if you look at current levels. But what I'm saying is that if the downtrend continues, then those are the retracements that will happen. Okay, so moving now to the MACD. The MACD is always hard to look at. Last week we saw that after the crossover that happened in April 29, the MACD is still bullish at that point, but then it said, the market is turning down. Indeed, it turned down, and there's a bit of crossover that happened in May 9. This red candle, a very long red candle, the body is long and it's thick, and that was when the crossover happened again, but on the bearish side. So right now, MACD points towards bearishness. The awesome indicator also turned bearish. So if you look at all these trends, all these charts, analysis of chart tools, you can see that the market is about to enter a bearishness. So right now, what we can say is that the market may still continue to move down, absent any positive news from the political side or from the economic side. It's just May. I'm saying that because the income statements of the companies are not due until June, so we won't have a bit of a good news unless companies start sharing the results of the first quarter and the second quarter, which will happen in June. So my prediction would be for this trend to continue this week, considering also that elections, while it's less violent, I guess, compared to some elections in the past, still some of the things that I see on Facebook and Twitter, we have the so-called intelligentsia, the intelligent votes, complaining about the results of the election, in the sense that still the people who have committed wrongdoings in the past continue to be on top of the partial and unofficial tally of most votes, at least in the senatorial level. So again, going back here, I think that the market will continue its downtrend for this week, but it will try to slow down, I guess, as soon as it reaches the 200-day average. So I predict that this is the next support level. If it does turn up, never touching the 7615 level, then we can see we can start to look at the upward trend of the market again, and it will continue in its uptrend. So that's it. Thank you very much.